Welcome to the BCheque chats, where I get to speak to some of the smartest and most talented builders in Web3 right now. Today, I am very happy to welcome Mando, a successful trader and investor in this space, co-founder of Canary Labs and Degenz, and potentially more stuff that I don't know about yet, as well as co-host of the very popular Rug Radio GM show. Mando, welcome. Thanks for coming on today. Were those all of your job titles?
Yeah, it's been rapidly expanding over the last 6 months, but I think that's about it. Yeah, it's well, hopefully trying to streamline some of those things, but it's growing for sure.
There'll need to be like some sort of internal M&A where you just head, all of these things merged together.
Yeah, exactly. Like I think we're trying to see Canary Labs as like the topco now. And then whatever we do is below that. So I think just co-founder of Canary Labs is what I'll have to go with. We have like flips as well, which we do. So we're like regularly involved in, and a couple of other things. So we'll start with just co-founder of Canary Labs, and hopefully that's enough.
Yeah, that's cool. I saw the flips in the Twitter handle in the bio as well, but I had to keep it succinct. But yeah, we'll hopefully get into a little bit of that as well, though, because that's super interesting. So we've got loads and loads of really exciting stuff to talk about with the release of your Degenz Access Pass yesterday, around last night. But I think before that, and we were just talking off air, I think there's so much to talk about this, so we'll need to contract it a little bit. But we do find ourselves in a bear market. We've woken up, as we were just talking about, to ETH going down very, very significantly again, which has been doing the whole week. So just kind of starting off with the kind of broader situation, how have you woken up today? What's your feeling on inflation, geopolitics, the market at the moment? I know that's a lot to unpick, but let's get into it kind of bit by bit.
Sure. So I'm the macro picture is like nothing we've seen for the last really 15 years. Like this is not like any of the other sell-offs. And I don't want to be like, this time it's different, but there is normally a regular playbook with previous macro sell-offs where no matter how bad the situation is, central banks come to the aid. And we've had, over the last 15 years, you've had the big financial crisis followed by the sovereign crisis in Europe, followed by numerous other like smaller crises. Then we had COVID, and the extended period after that. Like each one of these pretty major blow-ups has been dealt with by central banks coming in and basically being like, "Don't worry, we're going to buy assets to stop there being a recession, or like to dampen this." And they've been allowed to do that. Like I don't know if anyone who like economics 101, if you start printing money to buy things, which is what the central banks have been doing, you normally are faced with inflation.
And that's been being done on an unprecedented scale, right? Like there's some crazy statistic that I don't even remember the number. It's something so absurd, but like 20% of the number of US dollars in circulation has been printed in the last year or something like that.
Yeah, look, it's been a strange one in that it's never caused any sort of inflation. But during COVID, there was an unprecedented amount that was printed. There is still mixed data right now about whether money printing actually causes inflation. Like it's more causes debasement of the currency, which is a slightly different sort of effect, rather than causing inflation. And now, though, you've got this strange scenario where inflation is picking up, and it's picking up for reasons where, part of it may be to do with this money printing, how unprecedented it was. But like I said, there's been strangely little evidence to point to QE causing that, at least for like regular household goods. You've seen inflation in financial assets over the last 15 years. So like the price of housing has gone up, price of stocks, bonds, any other financial asset has gone up a lot over the last 15 years. But in terms of regular household items, which most central banks look at for how they look at inflation, look at a basket of goods, there hasn't been that same level of inflation. Now, what's happened over the last year is that there were massive supply chain issues coming off COVID, and those took a long time. So, like, as COVID stopped, and there was like mixed effects across the world. It slowed down in some places sooner than others, but demand switched on all at the same time. Then you saw massive like bottlenecks. Like you saw a lot of supply side inflation, you would say, and that the Fed was faced with this strange position where suddenly things like the price of oil, commodities, a lot of the raw materials started going up a lot, and they still had very low inflation. So inflation started to creep up back end of last year, and then it just kept going. And inflation is one of these things where once you let it out of the bag, it's very difficult to put it back in. Like, it's all about expectations. So once people's expectations of inflation goes up, it can be very, very, it can take a long time to kind of rectify that. So you ended up with this strange scenario where, although the Fed may or may not have caused this bout of inflation, they are now left in a position where they have to deal with rein it down. And what they can do is raise interest rates. So they are now in the course of expected to raise interest rates. I mean, the market's pricing they're going to raise interest rates all the way up to 3.5% over the next 2 years. So they're expecting a very, very aggressive stance in terms of raising interest rates. And that's completely opposite to what has happened when it looks like we're heading for a recession. Normally, the Fed is there, or other global central banks, the ECB, the BOJ, like the main ones across the world, are there supporting markets when they look like this. And this is completely opposite. They're now leading to a scenario where they're increasing interest rates. There's a lot, it exposes leverage in the system, particularly in emerging markets, because what you've also seen is the dollar has become incredibly strong over the last 12 months, and that's one of those ones where the market is going to have to deal with this one itself, and it hasn't had to do that for 15 years, but longer.
Do you think this is do you think that's good? Because I think one of the criticisms that's been leveled at the kind of established system is that, well, one of the complaints is that there is always a bailout, at least from some quarters. Some people like the bailouts, but some people have criticized the system by saying, well, the system will never fix itself if there is always a crutch to lean on in bad times. So in your view, is it good that we're now going to have to face the music?
What you're saying is very fair. Like, there has been a lack of there's been a lack of defaults across Europe, the UK, even the US. Like, a lot of what you call zombie firms have like continued, and that's maybe created some like it's halted the efficiency of like the economy, which has been bad. So people have argued that you need these sort of cleanses to occur. That being said, my personal view is that the Fed raising interest rates isn't going to fix inflation, in my opinion. Like, this course of policy, in fact, is just going to expose leverage in the system at a time right after COVID where leverage has peaked, right? Because people were and companies were all in dire straits, and government even. Everyone had to borrow to get through COVID. So to raise interest rates through this period actually can just lead to a credit crisis, a credit crunch, and that's when you get really bad recessions. That's when you get really, really bad recessions. So my personal view is that the Fed
and other central banks are going to make this a lot worse than if they'd just done very little, or if they just like slightly increased interest rates. Because I just don't think that their policies are going to fix this. I think the only way to fix this is the war in Ukraine and Russia gets fixed, or there's some sort of agreement. Although arguably the supply chains around that are still are not going to get fixed. And you get things like China naturally opening up again after their most recent bout of COVID. So that these are just not things that raising interest rates is going to fix. All raising interest rates is going to cause is potential default cycles, and I just don't think anyone wants that after COVID. Like, everyone was borrowing with the expectation, that we can get it through the next 2 years. Now that's a very different scenario, and that's I don't know. Maybe if you ask me in 50 years, is this a good thing? Maybe I'd be like, yeah, I guess that was a But if you ask me for the next 10 years, is this a good thing? No. Like, this is really quite a tough scenario. And you look at where there's massive leverage in the system. A lot of companies borrowed. There's massive leverage in the housing market. Like, it normally costs 10 times your median income in major cities, sometimes even more than that, like up to 20, 30 times in top cities to buy a property. If you then put interest rates up, that can cause a housing crisis. So I just think that they cannot continue with this sort of policy. I think they're going to have to blink, basically.
Yeah, it's a really tough situation. I agree with that, and that's quite kind of a nice economics 101 on how all of this stuff is related. And we were speaking off air about like the importance of belief in anything. Like, the markets in many ways reflect people's expectations, what they believe to be happening, and there are things happening in the world where it seems like people just need to believe that it's going to get better, and people can't see a reason to believe anything better at the moment. So I agree that the kind of the resolution of various conflicts, the opening up of particular markets, like, if that could just happen, then people could start to believe that the future was brighter, but it's hard to see that at the moment.
Yeah, look, like I said, the macro picture right now is uncertain. It's always uncertain, but this one seems particularly uncertain because you no longer have central banks who are going to be helping. They're suddenly now going to be exacerbating, and that's just a very different scenario than we've had. Like, this has been the status quo since 2008. Central banks stepped into the market, but this is far more akin to, like, some of the recessions you maybe saw like in the 70s, 80s. So it's we're on that front. Now, for crypto, I think it's slightly different. I think crypto, strange period to be involved in crypto, because crypto has seen incredible adoption over this last cycle, particularly ETH. Like, you look at the number of users, number of wallets, number of applications. Like, this time last year, barely any of NFTs had happened. DeFi is 2 years old, basically, less than 2 years old. Like, over this last 2 years, you've seen unbelievable adoption of some of this technology, and so it's a strange time to be involved, because you kind of look at these things and you think, well, the amount of smart people building businesses coming to this space, believing it's revolutionary tech, that you can build a new internet on it, really getting behind this as a concept of like the commercialization or bringing money into the internet, and you're starting to see some of the applications of how that could work. That's just like massive, and I think this is now being caught up in this as a concept as well, in that higher interest rates are battering things like the NASDAQ, and you're seeing most crypto get absolutely hammered.
It's there's definitely that kind of macro environment weighing on it. But then when we were talking about there being this type of, well, a potential cleanse in the normal market, we're also seeing significant activity and sort of unhelpful activity for the market in crypto itself. So one of the things we were talking off air also is about kind of Luna, Celsius, these various funds and kind of pseudo bank operators also having a very hard time. What do you think? What do you think is going on there, and how is this separate to the other macro stuff?
Yeah, so obviously DeFi grew to about 200 billion TVL at its peak, just slightly higher than that. This was a massive industry based on trying to replace the banking system. Like you give them money, you get some yield, and how traditional banking works is, you give them your money, they lend it out to somebody, and they make the margin. So like you give them your money and they give you like a 0.5% interest rate, and then they lend it out to somebody at 3 to 4%, and the bank keeps the margin. And the bank keeps about 15%, 10 to 15% of the reserves at any one time. But generally you don't get bank runs because the central banks have often backstopped them during any issues. So you've seen various bank runs in the past in, let's say, the UK and the US, where you have policies like that. And normally depositors are protected. They're legally have to be protected up to a certain level, but often they're protected up to a much higher level in reality. Most bank defaults normally end in depositors being fine. You've seen certain scenarios like in Iceland where that hasn't been the case, where like foreign depositors hasn't been protected, but generally often it's depositors are fine. Now what you've seen during DeFi is that there's been two main things. One, there's been this persistent view that we need to create some new form of stable currency. This is something that needs to happen. Like stable coins are something that needs to happen. The concept of I can come on to crypto and I don't just have to buy ETH, I can buy something which has a price which is stable to the price of my fiat. And there are people that do this well. Like USDC, which is the coin backed by Coinbase. They literally take your dollar that you give them, they put it into a bank account, and they issue you USDC. Like that's a 1-to-1 ratio. There are some banks, there are some people who do this slightly differently, like Tether. Tether takes your $1. You can look at what Tether owns or reportedly owns, but it generally holds more liquid assets. So it holds a large number of short-term assets, either dollars or treasuries. Sorry, Ovi's actually texting me right now. And you end up with a scenario where that's they reportedly have like 110% collateral. They are over collateralized. So although they own assets which aren't just dollars, they own like short-term securities. They are pretty well capitalized. If you believe their numbers, they would be a incredibly high-rated bank. They would be like AAA plus if you believe their numbers, right? The main question is whether you believe their numbers. Whereas like if you looked at, so they hold 110% effectively of the deposits in assets. If you went to your high street bank, they probably only own 10% of the assets in short term. So it's a very different scenario. And that sometimes I think a AAA bank would normally hold like 30%. So that gives you a concept of to take down Tether would take a long time. But then you have this other concept of decentralized coins, which need some of them want to hold a more diverse range of assets. So like your treasury is made up of ETH, Bitcoin, some dollars, some maybe some gold, or maybe some other like crypto coins. That's something that maybe like DAI has been trying to achieve, and MakerDAI has been one of the more effective protocols out there. They are able to make some. How Maker works is that it also works as like a lending platform as well. So they actually able to make some interest, but nothing crazy with their deposits. And that's like that's an okay way of doing it. I think DAI's actually done a decent job. But then you have other algorithm stablecoins, and Luna was one of the prime examples, but there have been others. Tron is now trying to do one even at the moment, where strangely the treasury of your coin is made up of another coin. And that coin can just fluctuate wildly. And then when if that coin plummets, then suddenly the treasury of your stable coin also plummets. So it's that as a concept. It's just been crazy to see how people didn't see what could happen in those scenarios. Like Luna going down is something that was talked about for so long. It all works when it's all going higher. Like when people want to have more of a stable coin, so they deposit more in the Terra protocol. It works, but when you see outflows and that governance token, which was Luna in this scenario, starts to go down, then UST can get hammered. So firstly, you had a massive blow up in that as a concept, but that as a concept has seen blow ups for a long time. It's just that the how large Luna was is just crazy. Like it had 20 billion sometimes, I think, including the governance token, it was like a 40 billion ecosystem, so it was massive. And then what we've seen recently is that where I just described was what people do in banks. The reason why you don't get bank runs really is because you have that protection. Now, what a lot of products seem to have been sold, where you give some company like Celsius your money, similar to how you give them a bank, and they promise you an interest rate, but you have no idea what they're doing with it. And what they would often do is they'd lever up, they would to get more yield on your deposits, they'd extend out or go into a liquid asset. So they've got caught in some pretty illiquid positions. Number one, they got caught, I think, partly in the Luna Terra situation, although I heard they got out. And then,
I think a lot of people got caught in there.
Exactly. But what they were doing is they were offering you 10% on your stable coin, and they were going and putting it at 20%, and they were keeping the 10% difference. Right? That's how they were working. But they particularly got caught in this concept of staked ETH. So like there were Lido staked ETH could get you like 7 to 8% on your ETH, and they were probably offering their depositors like 3 to 5%, and they were pocketing the difference. But when you then get people wanting to withdraw their money, you have short-term liabilities, and that people can take out their money, and a long-term liquid asset. They haven't been able to get out of their staked ETH position because there's no liquidity to get out of their staked ETH position, and that's been the case. It seems as though with a lot of their other positions as well, they have a lot of worry. So this is some of the stuff that like banks, the whole banking system took decades to go through. Like then you bring regulation about how much these sort of protocols have got to have on balance sheet, and or you have to protect consumers and what sort of protocols they can access, or you need some sort of backstop from some centralized figure like a central bank. Like there is a real reason why we have a banking system like it is. It isn't just like you have all this regulation. There is a reason why you have a lot of that. It's to protect situations like this, because people have come into this and assume they have the same sort of protection that you would in the normal banking system, and they don't. And they've seen massive unraveling. So the whole concept of DeFi, there are some really great things in DeFi. Like you can do peer-to-peer lending. Like Aave, I think, is a very interesting protocol. You have things like MakerDAO, again, which I think is an interesting protocol. Uniswap, I think, is an incredible protocol. Like there are some really great things in DeFi, but it's been caught up with trying to attract retail users, and retail has been absolutely hammered because there's just been mis-selling, or at least misunderstandings of what the products are that people have been getting into. So
do you think that there's this is maybe a slightly political question in a sense, but do you think there's a danger to the extent that people want to run a decentralized network here and a decentralized banking system? Do you think there's a danger that if we don't sort this stuff out quickly and provide some sort of better consumer protection, then when the central bank digital currencies will come, which they will, because that like there's no way that these people are not going to issue centrally issued money, that will appeal more to people because they'll be so scared and or scarred from these DeFi experiences.
It'll depend. Like when the Fed starts its stablecoin, you'll probably see some banks come on and start offering services using that stablecoin. But it'll be very similar to like banking. It'll be very similar to you going to Chase and getting a 0.5% deposit. Like it will just be a different system for a different way for the current system to do what they're doing. But this will always offer a slightly different role. I don't think we will get the same level of I don't think the Fed is ever going to back some random DeFi protocol, or the Bank of England is ever going to protect.
No,
it's just not how it's going to work. They might arguably protect the ones that use their chain, but there would be massive vetting of who could potentially use that. So I still think this will exist. I just think that there will be. This is what DeFi needed to go through. Like retail investors need to go and understand the risks. Regulation of this sort of stuff will take years. Like it's global banking regulation in this scenario, and that's going to take years to sort out. But look, it's
I agree. It's just a shitstorm of everything at the moment. Where there's all this DeFi stuff going on. There's also all the normal stuff which we've already discussed, and obviously the way that even we've met is through NFTs, and that's kind of the thing that it interests me the most, and people are wrecked and their portfolios there as well. So there's a lot of stuff to deal with at the moment. So on an individual level, like taking into account all of these things that are going on in different spheres of the market, what do you think, like for an individual who's going through some of this stuff, what can people do to survive?
Look, I'm incredibly bullish on NFTs. Like, I think that as a concept is very different than trying to replace the global banking system. Like, the global banking system is really, really tough to get right. Like, this sort of stuff there's normal growing pains. The concept of unique ownership, which can be verified on a blockchain, is just an incredibly useful tool. It's what originally I never had bought. I'd stayed away from DeFi. I'd stayed away from buying crypto ever before. Like I bought my first crypto last February.
Me too. Yeah, mine was in January last year.
Because I never really believed in a lot of the applications, or at least I knew that they were very, very young. And DeFi did interest me, but it also seemed like there are certain elements as well which are like Ponzi-like. So I was like,
there's a higher barrier to entry as well, isn't it? It's like, you got to log into this app and do this and that, and then you've got to throw your money somewhere. Whereas getting into NFTs for me was just like, I can go to Nifty Gateway, I can use my credit card, and now I've got this thing. And then it's like a starting point. A, you can understand the culture and the art, which is like A, and B, it's like, okay, you can onboard me in an easy way. Now I can figure out the wallet stuff and sending it to MetaMask, etc., after. So I thought that was it's an onboarding issue as well, exactly. To some degree.
I think it's onboarding, and the concept as well is like one where you have very regular blocks, because we're going through this concept like DeFi has to grow and people take unimaginable risks. So like there's a lot of, you get zero, and there's leverage, you get zero, so you can lose zero like instantly. Whereas NFTs is like this concept. I was originally very interested in this. So like what you look at when you are in this market, so like when there is very high inflation, and even with high interest rates or like the world going terribly, what is going to actually increase in value? Well, collectibles, watches, cars, wine, I don't know, like antiques, all this stuff goes absolutely bananas in this sort of scenario. So like the cost, like I don't know if you're involved in watches, but some watches are up like 500% over the last 2 years. Some, I think a lot of wines like Bordeaux, champagnes, Burgundy wines are up like 50 to 100% over even the course of the last year. Like this collectibles was, and it's the same with art as well. Like you will see record art sales if it wasn't maybe for NFTs. But I was in middle of 2020, early 2020, I saw, or at least I started to think that this was about to be absolutely massive, the concept of collectibles. So I started getting involved in classic collectibles, so like wine, art, watches, and then back end of 2020, start 2021, I found out about NFTs and the concept of digital collectibles, or even the ability to like verify physical collectibles digitally, and that is, as an asset class, is something that can be absolutely massive during this period. So I still really, really believe that. I think it solves provenance for a lot of things, which has been a massive issue in art markets or a lot of other collectibles markets. Like you see it regularly. Like provenance is something that is people get ripped off for millions in things like wine, art. I think even Logan Paul bought like a bad box of cards for like $3 million. Yeah.
Pokemon cards,
provenance
right?
is a real issue in these markets. So immediately when you have this sort of on-chain provenance, it fixes that, and that was an obvious concept. And then it's also merged with this concept of like digital identity, which is a massive one. Like the concept that people spend so much of their time online. They are, whether you want to stop them or not, like they like to be on Twitter all the time. They like to be looking at social media and like having a persona on there often. And this is a way for them to help build that out. So those are like massive concepts. Those are concepts which aren't going away because interest rates go up or some DeFi gets blown up. In many ways, I think that as a concept is the biggest concept that's going to probably ever happen to blockchain. It's in my opinion, it's way bigger than DeFi, because I think DeFi is always, like you just said, it's always going to have competitors when you see more centralized people like the Fed bring out their coin or China brings out its coin, or like this concept of unique ownership verified on the blockchain for digital and maybe even physical goods. Unique ownership is something that if you can make that digital, that can just go massive. You can apply that to not just digital assets. You could apply that to houses. You could apply that to cars. You could apply that to football tickets that you go to a game with. Like that is massive, massive tech, which we haven't had before. And
yes,
it's something that's had massive adoption even over the last 1 year, and I think is going to have massive adoption over the next 10 years. But unfortunately, you don't buy these things on a stable coin chain. You buy them on Ethereum, and you can get caught up in the massive swings of this as a market as well. So
indeed. So when you say, so I mean, I completely agree with that thesis. That's the same thing that I sort of conceptually realized or concluded at some point in the middle of last year, maybe. So I guess the question now is, I've got two specific questions. I think, A, given that is, what you believe to be true, what we believe to be true, how are you thinking about, okay, it's a bear market now, things are really, really bad, but I believe in this concept. So how are you preparing / building with that in mind, given the bad scenario and kind of broader market sentiment? And B, what should the people who want to stick around, like might be wrecked to some degree, but do also think the same thing, but might not be in as prominent a position, how can they get involved? Like,
look, I think those are some very good points. Like me as a collector right now, we've always been pretty concentrated in what we've got involved in. Like, I think it was obvious as well. Like, although I really believe in this tech, it's very difficult to work out what's going to have long-term value at this exact point. So we've always been concentrated in positions that we really believe in. So firstly, I would really, really look at your wallet. It might be painful, but try and concentrate into the stuff that you really believe in. Sell everything that you don't believe in and concentrate in the stuff you will believe in. Because the other thing I believe is that ETH will probably have a better growth trajectory than probably 2/3 of the NFT market over the next 2 to 3 years. Like a lot of the non-biggest collections, or what you might call like blue chips, that they might not even recover from this. So like, don't be waiting for that bounce in a lot of those. Like, simplify it, put them into your highest conviction bets, or hold ETH, because ETH is down 50% in the last 30 days, about 40% this week, and about 80% since its all-time high. Like, this is,
I think it's going down while we're having this conversation, mate.
$124 billion market cap. That's crazy, because the amount of volume that was in the NFT market over the last 12 months is about 50 billion. So it's trading at just over 2 times the volume of the NFT space over the last 12 months. Like, that is crazy. If you compare that to like the pound or the dollar or the euro, like how much trading there is in those currencies versus the market cap of those currencies. Like, you normally call that money velocity versus like market cap. I think the money velocity in the US is like 20 trillion. If you were to describe what the market cap of the dollar would be, it would probably be thousands of trillions. Like, so look, we're like orders of magnitude different compared to the velocity of money in this scenario. Like, ETH is, in my opinion, a good long, even after all this gets destroyed, because it will define this as a concept as well. So I think simplify, own ETH, or own high conviction plays. So like, and you should be doing this all the time, to be honest. But during a bull market,
it sounds very sensible.
During a bull market, it's easy to hold things which are complete degenerate plays. But you should be honest with yourself and be like, this was a degenerate play. You know, like, this was degenerate. It was me rolling the dice on something that I didn't think was really going to have value over, like, after 3 months. I shouldn't be sitting here being like, hold the floor, like diamond hands. Like, no, like, that was your rolling of the dice at the casino. You were all in it for the pump. Like, this might have value over a medium term.
Yeah.
You've got to be honest with yourself in these scenarios.
Yeah, so in a sense, it's like, do what you should have been doing before, but if you didn't do it, then just be honest with yourself right now.
Yeah, that's it. And I think what you're going to see is, you've kind of seen it throughout the whole year, but this concept of decompression between top collections and bottom collections will just continue. It will just continue and continue and continue. There will only be a certain number of winners, and you should, if you don't think you own any of those winners, just own ETH. So that's what I would say. And then I think you should also always look after your liquidity. Like, if you need to also sell for, to cover bills, or like you quit your job, or like this is, you wanted to, you wanted to buy a house, or I don't know, anything. Like, you got to protect yourself at the same time. So like, it's going to be tough, because you might be in a scenario where you're like, this was up. I've lost so much money over the last 3 months. Like, ETH is down 60%, and then NFTs are down another like 50%. So maybe this is a really tough time to sell, but sometimes you've just got to do that and kind of move on. Like, they were unrealized gains, so it's very, very difficult mentally to always peg yourself to your net worth at the high with unrealized gains. It's a really, really bad tactic. And you'll probably learn that next time. I think you just got to deal with a situation which is in front of you. So I think you've always got to look after your liquidity. But this will all come back. That's something that I would always say, like the concept of digital ownership, the concept of NFTs, and its applications, and a lot of the top collections will all come back screamingly when you end up seeing stability in ETH, when you end up seeing stability in this as an asset class, and I think that's something to kind of, you can still have very long-term belief in. So that's kind of where I'm at as a collector.
As a builder, I think this is a great scenario to be in, because it gives us a bit more time. Part of the issue was always that, like, you were left with people who just like desperately wanted price to go up, and like they were just here for the flip. I do like that about the Degenz, at least, community that we started building, that it was a bit more like, vets. So I think it gives us a bit more time to build out what we're trying to do, and I think that's maybe quite good as long as your treasury is okay. I think it's quite a nice scenario to be in. So I'm kind of happy.
One of the things I was thinking was that it's actually a bit of a wild thing that we've become accustomed to in the space, where various builders or project leaders get given a ton of money up front, like a real ton, without really, I mean, you probably have to articulate a vision or a goal, but without really demonstrating anything. And that's not necessarily normal for starting businesses, right? Like as a starting business, you might have like a little bit of a period of time where, you're breaking even, you're trying to prove to the market that you're good, you grow your customer base over time after you show that you can deliver. So I feel like maybe we'll move towards a period of normality, where you can launch, but there's not that kind of fervor around. There's not the froth that loads of people will ape into things unless it's a free mint. You build slowly, and you prove to people over time that what you're doing is useful.
Yeah, I see that as always being an issue in NFTs, and that the way they're sold is normally you've taken the money up front with some promises of future return. Like, that's partly the nature of NFTs, and I think that's partly also the nature of how people, I don't know, people do like that lottery to a certain extent. They like the promises of future. They like, you've even seen like when products have actually been delivered in this space, it's normally a massive disappointment. Part of it is like, people do quite like that. There's human nature, you can't deny it.
Yeah.
But there's been a massive mismatch there, and that leads to massive abuse in certain scenarios, like Pixelmon, where you can just give someone like 2 cents of an idea and they'll give you $1. So I think it is a little bit worrying, and like hopefully over time you see, there's a big trend towards doxed founders with real credentials coming into the space and doing things. I think that's going to be great. I continue to think that's going to be a really great great move, that we have a slightly higher accountability, and our aim really is to build up our profile in this space so that we can continue to try and deliver to holders of the various things that we're getting involved in. So I think it's a great time to be considered one of those people as well, if you're actually there for that reason. Too many people play the short game in this space, and it's not that the short game isn't profitable, like you said. People can walk away with millions. Like, you can understand why people play the short game, but the long game you can make billions, in my opinion.
Yeah,
like, as a builder.
Yeah, there's a real opportunity there. I had a really interesting question that I want to ask you on. So we've sort of touched on that. There's these better. It's kind of a market where the incentives are slightly more aligned between a customer who might want a product and the builders, because they're not getting given a shitload of money up front. One of the things we discussed, and this is one of the biggest takeaways from my conversation with you when we had the other day, when you were giving your opinion on the thing that we've launched at 32 Dreams recently, and it was that, you know, do things necessarily need to be NFTs? And you said just then, like, the nature of NFTs is that, yes, you get given a bunch of money up front, and, you know, the question that most stuck in my head is, does something need to be NFT? Like, how do you deal with the everlasting nature of the NFT? And that's something I walked away with a lot, like giving it a lot of thought. And the question, I guess, is, how are you guys thinking about that? Because you've got a variety of products, which we'll sort of dive into in a bit more detail in a moment. But how are you thinking about that everlasting nature?
Yeah, so that's a very, very, it's something that I think about a lot, in that you realize this when you launch an NFT project, is that
yeah,
suddenly you have customers for life. That NFT is never.
It's all fun and games before that, isn't it? Like when you're trading them, it's just
yeah,
because it's not permanent for you then, because it's almost like you're buying them,
yeah,
and you've got a part in the back of your mind. You're like, well, I can sell this tomorrow or the next day or next week.
Yeah, I think that's often, you only really realize it once it's launched, right? Like, this is where often things get overpromised, because suddenly it's there, and suddenly you realize that NFT is never going away. It's permanently on chain. And that was something that really stuck with us with Degenz as well. Like, reason why we kind of came back to, like, really trying to make it work, is that, like, we knew that it was never going away. Like, it's not like, oh,
yeah,
this was a failed project, or like the IP didn't work, or like whatever we tried to do, it didn't work. It was like, no, that's a mark. And you're going to be here for the long term. You want to make sure that whatever you do going forward takes those failures basically with you. It's a strange scenario like that, in that if you are going to fail, make sure that if you end up being a continual entrepreneur in this space, you take those failures with you and you try and rectify them. I think that's the only way I can imagine doing it. But I think there is a massive mismatch often between services which are promised and the product. The product is for life. Founders will die at some stage, or founders, might want to change their jobs at some stage. So there is, on a 10, 20 year plus horizon, we're going to have to probably deal with the concept, for example, that Gordon Goner and Gargamel might, in 30 years, move on, and somebody else has to come in and run Bored Ape Yacht Club. You see what I'm saying? Like, there is a concept that there's a mismatch between the people behind it and the product. Now, we've thought about that a lot, and part of the reason why we kind of went for, we like projects like MFers, right? Although the fact that Satoshi left, I don't think is ideal in that scenario. You feel like ones where the value is more the community, and it's really just a reflection of the community. And what your job should really be is creating tools to help that community do well. If we're talking about a 10K profile picture project, or like an avatar project, which makes up the majority of them, it's more about building tools so that they can express themselves. So for like Rec Guy, for example, we've started this thing called Rec Guy Confessions, which is like it's a way
that's fun
for them to reflect themselves, in like they can just enjoy it, or you just create the Discord group for them to share those stories, or you create the like, we're going to create subdomain names so that you can be called I don't know, like bcheque.recguy.eth. So there's like an identifier there. Like, really trying to create tools which allow the community to flourish in their reflection of themselves. And Bored Ape Yacht Club has done that as well. Like, like, it's a brand that people like to share between each other. It doesn't necessarily rely on any one person. But if the organization, therefore, should just really be about trying to foster that development, rather than going down the route of like attempting to build massive IP. I think that's a much more difficult thing to do. I think that's a very difficult thing to do. So unless you have like an incredible gaming platform, like I think it's a difficult thing to master.
Yeah, I think one of the things you guys have done nicely, which maybe other projects are either unable to do or maybe unwilling to do, or just is not part of their roadmap, because everyone sort of wants to build a community, right? Build a community, build some tools for people to have a nice time. That's fine. But one of the decisions you made was to lean into your previous skill set and produce these reports. Why did you decide to do that at that time, to kind of bring Degenz back from the position it was in?
Yeah, so me and Obi started this project, or OSF started this project, and we're like best friends, so we know how to work together incredibly well. And it was just a project which really at the start of Profile Picture Project, we launched it the same week as Cool Cats, I think it was, maybe even a week before. Like, it was one of the very early ones, and we were like, look, we think this concept can take off. The concept of like a community built around a 10K Profile Picture project that Bored Apes were starting to do. Remember, Bored Apes at that time, they just had like, you could write your name on the bathroom like wall. Like the concept of utility around NFTs was very nascent. Like Punk's comic just decided it was going to do a comic. So we were like, right, we can do this. We'll create a project which is around like memes. Like the project was like, if you can go into the depths of what Degenz was, but like we really tried to play up to the content of like chads, farmers, got NFT goddesses, whales. Like we were like, we'll make like a meme-based project, which is like a reflection of the space, and see if that does well. And we got like more like a comic book artist who was an incredible comic book artist to help us do it. But we were like, right, that'll be the narrative, and we'll try and build IP around that. We'll try and build like a comic. And this sounds like the sort of stuff you might imagine from like a very low quality project now. But back then, that was like what people were looking to do. We were like, oh, I'll do much.
Yeah.
Like, this is what Bored Apes were doing. And we were like, right, we'll do that. So we started to do that. And immediately from launch, our distribution was completely off. Like we had too many humans, which people didn't like, and not enough like cool animal style figures, which people loved back then. And like the floor got decimated, and like I think 95% of projects which don't make it after which drop below floor price after the in the first week never make it. So we were, or maybe even 99.9%. So it was a bad period. Like once it dropped below min price, we tried things like, all right, we'll do like a comic, or we thought we used to do like a monthly art competition where we paid out 5 ETH to the winner. And we'd like buy their art. We buy like the top 3. We tried to like build some of the community stuff, like make it a thing around artists, but it was just tough to do. And so we sat there at the end of the year and we're like, look, this is. Firstly, we were like, right, we did this wrong. We don't have a skill set in this. So, and we were relying too heavily on the artists at the time to like build out a narrative, which we were like, this is tough because the narrative people don't even want to really relate with right now. So we're like, right, let's just do what we do well, which is we're good educators, we're good traders, we can help people with that. And in something which I think scales incredibly well, like education scales unbelievably well compared to other things. You start providing people with education that is just, if you give them a course on how to, look at L2s or at how to even buy an NFT, and the number of NFT users does 100x, like that scales. It doesn't need updating. It naturally scales with the size. So we were like, well, this is something we can do. So we were like, right, we'll build it around that. We'll start doing project reports. We'll start doing morning commentary, like a bit of a summary of everything that's going on. We will start giving like unbiased opinions on what we think. Give people the tools that we look having to evaluate things, and it started to take off. Like we started to try and do that in January. We thought we'd buy out. Like Degenz was our project, but we actually only owned 40% of it. Like when we did the project, we split it between 5 people. Like we were the public faces of it, but we were like the dev took 20%, and there were 2 kind of semi devs do like 40%, and then there was an artist who took 20%. So like, yes, it was seen as our project, but actually we didn't even own half of it. So
yeah, people don't realize the costs behind the thing.
Yeah,
do they?
exactly. Like, and that's on us. Like, for example, like that was our. And again, this was one of the first profile picture projects. Like, finding a dev was so difficult. Like, to actually do it. Like, it was just like getting it done was the main thing. So yeah, we were like, so we bought out the rest of the wallet from the other people, because Degenz also in the buyback process owned a ton of Degenz. So we're like, right, we have to take ownership of this. So we made sure we owned everything, and then we just started building it out in the way we do it. But it was like, forget what it looks like. We're just going to build a set of services which you can get with this token. And that's another thing I think people also forget, is that the nature of your NFT project doesn't have to necessarily be what it was at the start. It will adapt. It should adapt with
it can evolve,
what
right?
your core competence as a team can do over time. So that's something that I think we picked up on, and yeah, it would have been much better for us to just launch another project. But we were like, no, we want to be in this space for the next 10, 20 years. Like, it doesn't feel right for us to leave it at this spot, and it's not good to be at this spot. Like, it's just definitely not right. So we're like, right, we'll just build it around that, and that's then become our core asset. And then we've kind of just gone from there. Like, we're still keen on building these tools which scale well with the market, far more than things like IP. So education, like trading analytics platforms, that sort of stuff. The like media, the fact that we do a daily show, like all this is the sort of stuff that, like, I think scales really, really well. And that's really what we're here to do. We're here to build shovels and tools, which I think will scale well, and we'll try and reward the holders of any of the NFTs that we have as we do that. But
yeah, I think that's the really, really important point of what you guys did. Whereas, because the way I think about it is that a lot of people are trying to build value by attracting a community, but ultimately the community is the value, because if the community leave, there is no underlying product or service which is being provided. Whereas what you did was you inserted a product/service into the mix, and then that became something that the community could actually think, well, if I leave this place, I don't get access to this actual product or services. It's not just a community which you can duck out of and find a new community of people, because there's actually an underlying product. And I completely agree that the idea that education scales, particularly in the market right now, right? Like people are struggling across the board. But if you do stick around and you do believe in the core thesis of what's being, the future of Ethereum, what's being built out in this space, there's a real opportunity to get stuck in right now to the things that you mentioned, to learning about NFT, the underlying tech, to learning about L2s, to learning about all of this stuff, so that when the next cycle comes, people can be in a better position.
That's exactly it. Like, and that's why I kind of going back to the idea that I don't really mind it being a bit slower now, because we can build out a lot of those tools and wait for that. Because I know that when we get 10, 100 million people who are more accustomed with NFT technology, it will. If you build out the right stuff and you're seen as being someone who's been doing that for years, like that sort of stuff scales incredibly, incredibly well. So we're just helping build structure around what we're doing. What we've recently done with DApp basically is we found, as though increasingly as we started providing these different services to Degenz, people didn't understand what it was. Like, people would go back to it, looking at it as the fair profile picture project, or looking at them and being like, what the hell is this? Do you know what I mean? And we found yes, it was good to save Degenz and Regens, but the branding just wasn't right. The branding wasn't right as we expand. So we were like, look, we're going to take all the services that we gave to Degens and Regens, and we're gonna move that to a new token, which you're going to get airdropped. Degens and Regens will still be like a community-based profile picture project, but you can get, like, there'll be a place in our Discord for. But a lot of the services that we were giving and that we're going to build out are now going to be associated with this new token. So
that's really cool. So what exactly what are we getting for? Because I've got a couple of these. I think the access pass, that's going to keep having the reports. It's also, I also read though that there's like free NFT mints associated with it. What's the package?
Yeah, sure. So I think what we realized is we're good at doing education, so we're gonna continue to do what we've been doing, which is provide 5 to 7 reports every single week, and we're going to start building out a bunch of different primers for how to access things in NFTs, which are going to start being released, as well as like market commentary. We've built out a website, a new website for you to be able to access all that content. Before you had to, like, I don't know if you've read it, but you have to like download them from a Google Drive. Now there's going to be a website where you go on, you can read them. That'll be a place where we'll also put the market commentary and some of the more broader education tools. So it'll be like a one-stop shop for education, written education mainly on NFTs. That's kind of the base layer product. Now we also own, or part own a trading analytics tool which is called Flips.finance, which we are in the process of it has a very good free version right now, but that will be moving to a which will still remain, but there'll also be a premium version. Owning this NFT will give you discounted access to that on subscriptions, and so you'll be able to, right. There are plenty of these tools already out there right now, but I think ours is a very, very popular one, and I think that'll be a good way to kind of have you can access those tools for maybe cheaper, and then although we do, and that can also extend as well. So like we have some pretty cool plans. Once the Flips thing has been launched, to then expand also into the concept of like trading games, which I think will be a fun concept. It kind of matches with what we've been doing with Degenz, with what you can do with Flips, with like prizes for people who are playing the games. And again, that'll be something that owning the NFT will give you discounted access to playing some of those games, which I think will be a fun way for you to test out some of your skills in the space while playing. So like I think that's something that we're in the process of doing, and that'll be over the next, hopefully by August, I think, that will start to launch, or at least around that sort of time is when we're looking. And then finally, it's this concept that we are now building a bit of a profile in the space. We get constant incoming from people with projects and ideas, and we know so many people in the space now. Number one, we can vet a lot of the whitelist access or allow list access that people can. So if you just own one of the NFTs, you'll hopefully get a bunch of allow list stuff to some of the top drops which we think are coming. And then we're also, after we did Wreck Guy, which has been, Ovi's obviously built himself up as an artist in the space, which has been kind of a really cool transition for us as well. Again, it's allowed us to provide value to our holders. But we really like the concept of free or very, very low cost drops to our holders. The sort of ones where your community becomes support for the artist and what they're doing, rather than one where it's a burden. Because I think often that's what artists get themselves caught into. They release some piece of art, and suddenly they also get caught in this concept of like, when we are now customers for life.
Yeah,
you owe us.
Yeah.
Right. Whereas if it's given for free and it's given to holders of a broader community which we manage, it's actually quite an appealing situation for many artists, because they end up having their art held by 10,000 people, builds up their profile massively. There is still can be revenues in the form of trading fees, or let's say if we did it for like 0.01, like there is still some small upfront, and that's something that I think we can expand. So because we know so many people, so over the course of the next few years, that's I think what we're going to do. Like we of the various different avenues in NFTs, we still broadly think that profile pictures and avatars are going to be the biggest thing in NFTs, but we like banner art. I think music can be big. I like the concept of dynamic NFTs, generative NFT. Like I like this stuff, and I think we can easily access top creators in all of those fields and help provide, that style of drop to the holders. And that's something that isn't necessarily the core of what we can achieve, but it's something that we can help boost the community. Like in some ways, you look at Yuga Labs, or you look at the team behind like Azuki or Cool Cats or whatever, right? The core creative team behind them. They are kind of, Yuga's obviously gone the route of buying other IP, but often they can be straitjacketed into what they can do what they can do next. Like if you run World of Women, your next drop is probably going to have to be like a derivative of World of Women in some way, and like that's fine for the first derivative, but when you get to like the 10th, when we're in 5 years, and it's like, they're getting this airdrop. How like it really does have diminishing returns. I think the great position that we can be in is that we don't have to have diminishing returns. We can give people airdrops in completely different things. And you can just be a holder of the Degenz Access Pass and get access to top airdrops from various different things. It's kind of similar to how I think the Proof Collective, and originally did it with like the Grails, like they went to 10 different artists and they got 10 different drops. And they were seen as kind of cool. And then they did like a Moonbirds. Like, I'm not saying that we won't do like collections which will do well. Like we've done with Rec Guy, and we can build that out as IP. But I do like the concept of us being able to just be a platform where people can get cool drops from top creators that we have access to, and we can then evolve with the times in many ways better than a lot of the other teams in the space, in my opinion. So I think we're setting ourselves up to be a bit more flexible in what we can do.
Yeah, that's really, really cool, and a completely new avenue. So in summary, we've got the reports that will keep on going. They're doing really well. They'll continue. We've got this interesting addition of the Flips kind of analytical tool and potential future trading games, and this artist partnership avenue, which I think gives you like all sorts of flexibility as to how you can reward holders in future. Yeah, that all sounds really cool. I'm excited to check out the website when that goes live. When does that go live?
I don't know when this is going to come out, but it goes live today. So
nice.
Today is Wednesday the 15th.
Very nice.
That is the day it's going to go live. So you'll be able to today go onto the website, access any of the reports that we've done. At the moment, it's just going to have the reports, but we are in the process of hiring someone who's going to head that up and help provide convert a lot of the content. I think that it's kind of already been done in Degenz, and make that into a way for us which we can scale. So
very, very nice. So everyone will be able to check out the rebranded Degenz website today. I think this will go out today or tomorrow, so definitely do check that out if you're listening. Mando, thanks very much. I think I'm conscious of the time. Thanks very much for your time. Appreciate it a lot. It's been a great conversation. The final question I usually end on is, if there was something that you could advise as to how people should go about building, succeeding in this NFT space at the moment, what would it be?
I would say, firstly, it's a really tough time right now. I think you just got to believe and have faith that this will come back. This is a real use case for NFTs. The tech behind it is always going to be there. So don't lose faith being a builder. My only other advice is that I build alongside somebody else that I really trust. I think you need to be able to delegate and build a team around yourself. So I would also say make sure that obligation is shared. It's incredibly useful to have somebody else doing it with you. And I think that's something that you only really realize when you go through ups and downs of being through this space. So make sure you maybe build a team if you're going to try and do something. Get more comfortable with the concept of like delegating or finding a business partner that you can do something with. And yeah, don't lose faith during this period, because it's the next 10 years for this technology are just going to be absolutely crazy.
Yeah, I can speak to that a lot. I remember when we spoke in Portugal about that, and I thought about it a lot. And since I've shared the workload with someone and found someone who I like and I'm comfortable with working with, it's like it just 10x's your experience as well. It's just more fun. So it's like, yes, it makes it more doable, but it's also just way more fun this way as well.
Yeah, exactly. It's you'll enjoy it more for sure.
Yeah.
All
Very
right.
good. Thanks a lot, Mando.
Bye.
Take care. Bye-bye.